Yesterday was one of the busiest days for a number of months, and it was a very busy day for TraderNoble.com. Brian Noble joins us now with some more analysis of just what went on yesterday and how things are moving. And in fact, yesterday I know that you delivered, I think, more emails to your Platinum service than you've done in a long while.
Yeah, I ended up doing 7 updated emails. The last one went out at 7:45 a.m. this morning. Just manic. Nice, and initially we had the very strong ADP employment numbers yesterday. The Dow went up almost 200 points. S&P went up to 2375.5. Sold off a bit, rallied again ahead of the FOMC minutes, and then once they mentioned that they were going to start to rein back the QE, the S&P in the last 90 minutes just got hammered, fell 30 handles.
Well, let's take a look first of all at the S&P 500 and bring up an hourly chart to show you exactly what happened yesterday, because it was that wild move there going into the numbers yesterday at 7 p.m. UK time last night. And if you got caught caught the wrong way on that, you'd have been taken right out of the market. But in fact, what was your position going into this?
Yeah, we actually had a sell level yesterday between 23.67 to 23.73 with a 23.78 stop. As normal with my service, we go flat, unfortunately, yesterday into a major announcement such as the FOMC. So any short position was covered ahead of the announcement. And then my buy level yesterday was actually quite low at 23.48, and that subsequently got filled just before the close, before rallying to my take profit level at 23.53. So my service is a very hands-on. It's, take your 50, 60 points, 40 points if necessary, and try not to get caught, which is the key to the market, and that's why my updated emails are so important.
And of course, as I said yesterday, I think was the biggest points move from the top to the bottom, I think, since Trump was elected?
Yes, intraday movement was the largest since Trump was elected. It's great, the fact that he's come in now, it's certainly helped traders again, because certainly March, the first couple of weeks of March was very quiet, and then when he pulled the help bill on the Friday before the end of the month, it certainly got the last week to a bit of volatility and rescued that month, I think, for most traders, because the first 2.5 weeks of March were very quiet.
Yeah, okay. Let's move on to take a look, if we can, at what's been happening with silver. When you last came in a month or so ago, we spoke about this. I think the long trade of silver has been winning out since then. Are you still long?
Yes. On the 15th of March, on the night of the Fed rate hike, as you can see there with the green candle, silver had a large key day reversal off a 1683 low, and since then the trend has just been up. We've kind of stalled over the last few days, but following that key day reversal on the 15th of March, silver went up for 9 straight days in a row. Not huge movement, but the action is bullish. I think as long as silver can hold $17.70 to $18, I think we'll eventually head up to $19, and then we'll go back to the July 3rd high at $21.17.
Yeah, that is seemingly a long while off when we go all the way up to July last year. But this in the context of gold, very similar sort of pattern. We've got a topping out at what is a very key level here at 1849. If we look at the gold chart, we see that 1264 is the level, I think, which has been the level to beat from the recent highs we had on the 27th of February.
Yes, we've had 5 or 6 tests of the 1265 area over the last couple of weeks. There's obviously a major player selling the market there, but I think the more times that we test this level, eventually we're going to break it, because the resistance will get weaker and weaker. I think eventually when we take out 1265, we'll go up then to my next target is 1281, ahead of 1300, and possibly up to 1375, which is the equivalent July high to silver.
But before you take a long position on that, you want to see a daily close past this level?
Yes.
To 1265?
1265, and then I get bullish. I certainly wouldn't be short, put it that way.
Yeah, okay. We have been hearing a lot about what's happening in the markets at the moment in Europe because of Mario Draghi. This morning he's come out to say that they're not likely to taper anytime soon. I think a big worry for the ECB is the fact that inflation is coming off in many areas around Europe. How do you trade the euro dollar?
Yeah, when the euro is in a 3-month uptrend from 106.20 to 106.50, which if you notice with the euro, it's tired. It's not slamming down. Like even after Draghi's comments this morning, it got down to a low 106.28, and here we are back at 106.70 again. So I'm still a buyer on dip, on as long as we can hold the 105.80. I think if we break 105.80, then I think we may go back to test January lows of 103.41. But as long as we can hold 105.80, I think over time the euro will creep back. there's no doubt the Bundesbank certainly don't want a weaker euro. They've been out complaining about that the QE has got to stop. So it's amazing when Welderman came out yesterday and said that the euro is, we need to see the tapering stop. Then Draghi's out this morning hitting the wires saying the opposite. So it's in for an interesting time. And obviously with the Fed minutes yesterday saying that they have to start, reining in the QE, US is going to be a really interesting next 9 or 12 months. I think if they're going to start reining in the QE on top of hiking interest rates, it's going to slow the economy down, and that's been my call. I think the US goes into recession the back end of this year to early 2018. And the other thing is of note, as I was mentioned a couple of times in my commentaries over the last few days, the Fed have done 13 rate hiking cycles since the end of World War II. 10 of those have ended in a recession.
Indicating
don't need to be doom and gloom, but
yes,
just to put it out there.
Just to make sure people know. Let me just talk a little bit more about what you do with your clients, because events like tomorrow's non-farm payroll data. Do you go into these big events flat?
Yes, apart from silver. I'd always have a long silver position, but I'm flat into the major events, and I would put a straddle in. I'd have an order to sell above the market in the S&P and an order to buy below. An awful lot of times when the numbers are announced, the market has an initial reaction which could hopefully hit my buy or sell level and then revert to the mean. The key to tomorrow's payroll numbers is the average earnings. If they're weak again, I think the S&P will get hit. Even if we get a stronger headline number, and that's been basically the theme over the last year. We've gotten a strong headline number, and then when you analyse the average earnings, they've been very weak, and then the market initially rallies and then sells off on the back of it.
Also, what do you do at big events like Easter, for example, where here certainly in the UK, we get 2 days off either side of what turned into a very long weekend. And I think most markets close down on Good Friday, don't they?
Yes, all markets are closed on Good Friday. My blog will go out on the Thursday as usual. For my platinum guys, my calls will be valid until the Tuesday. Obviously, I'll be closed on the Friday and Monday as well. But the US markets opened on the Monday. If any of my calls get hit, they will get an updated email at some stage on the Monday.
Yeah. Okay, look, Brian, it's a pleasure. Thanks indeed for joining us. With a look once again at the markets as we go into a non-farm payroll figure on Friday, and of course that long weekend coming up the following weekend for Easter. That is Brian Nagle from TraderNable.com.